So we want to welcome everybody to our first video podcast for Florida Housing Finance Corporation, brought to you by onlinehousingtraining.com. Today we're going to talk about the Home Affordable Foreclosure Alternative Program, which is part of the Making Home Affordable initiative by the Treasury Department and the Obama administration. I'm John Little, one of the presenters today. I have over 15 years of experience in the housing and training industry, as well as being a consultant working with Florida Housing, Freddie Mac, and other housing intermediaries. And I'd like to introduce one of our other presenters today, Mrs. Cora Fulmore.
Hi, I'm Cora with the Mortgage and Credit Center. I've got a little over 25 years of experience in the mortgage and credit counseling industry. And as you know, I truly love this field and enjoy providing this particular podcast to you. And I'm going to introduce one of our other presenters, and that's Shane Darasol. Shane?
Thank you, Cora, and good morning to everyone. As Cora mentioned, I am Shane Darasol, the other partner of the Empowerment Consortium and onlinehousingtraining.com, national trainer, been working in the industry for a little bit over 15 years, worked for several banks in some senior positions, also a published author, and I am happy to be here today.
So the first thing that we're going to talk about today is the Home Affordable Foreclosure Alternatives Program. And basically this is a part that was rolled out in early March, which is part of the Making Home Affordable program. One of the main benefits of this is it gives a couple of options other than the traditional modification, refinance, or foreclosure. It gives the opportunity for the homeowner to either do a short sale or to do a deed in lieu of foreclosure as an alternative to foreclosure. So Cora, to open up the conversation, just a question: why do you believe that they determined that transition was a necessary option as an alternative to foreclosure?
Well, you know, John, families are losing their homes in the foreclosure, and we really have to look at all of the possible options that are available to them. And we know there are some families that we are not going to be able to save their homes from being foreclosed on. So it's only appropriate, and I think the most proper direction for the Treasury to go in providing assistance to families and helping them understand that there are other options. You just don't have to allow the house to go into foreclosure without seeking out some other options. And we're kind of delighted that the Treasury Department has come up with this other initiative to be able to help families through the process.
And that's a good point, that it's alternatives to help families through the process. And Shane, what are some of the differences between the foreclosure process or the modification process and the transition process that they put into place?
Okay, that's a good question. In terms of the foreclosure process, I'll take that one first. In Florida, we know that, of course, you have to become delinquent for a period of time on your mortgage before you're going to be served a notice or a lis pendens, if you will. And at that point, the homeowner is going to have an opportunity to file a response to that lis pendens, which would give them some time to kind of decide on which direction they want to go in, whether they're going to enlist the services of an attorney or go to a counseling agency to seek help in trying to decide which road they want to go down. But with respect to the foreclosure, in some cases, the homeowner is going to be faced with the possibility of, maybe I can't afford the home. And the counselor or a counseling agency is going to actually help them down that path in terms of determining which route they should take. And I always go back and forth with Cora and John in terms of foreclosure versus transition, because sometimes I take the road that it may be the best option for the homeowner to look at the transition. In other words, to look at the possibility of getting a fresh start. That fresh start may mean that you're going to have to go through the foreclosure process, but before you actually go through foreclosure, there are some alternatives, thus the Home Affordable Foreclosure Alternatives Program, which comes into play. And I go back to you, Cora, for a second.
Right. You know, I think the thing that we've got to understand and be mindful of, if all else doesn't work, there is another option, and that's the most important thing, and that other option just happens to be HAFA.
Right.
And that's the program, and that's the program we're going to be talking about today, how HAFA can also assist the clients that you currently work with.
Right. And with HAFA, with those transitions that we're talking about either a short sale or a deed in lieu of foreclosure, which in either case the consumer will either sign the deed over to the bank and receive some relocation assistance in most cases after going through the process, or in a short sale, well, they'll sell the property, not receive any funds from the sale of the property because you're selling it for less than for typically less than what the balance of the mortgage is owed. And certainly based on market conditions, we know that a lot of people are upside down and underwater in their homes. So with the transition, it will allow them to get away from the foreclosure process via that short sale, so they can move on to a different property after that. So in these cases, who benefits usually the most from transition? Is it the homeowner? Is it the bank? Is it both? Cora, do you want to talk about the homeowner's benefits possibly?
Yeah, John, I really think it is both, but definitely, without a doubt, the consumer benefits. There's an opportunity for them to move out of the property, maintain their dignity, either by way of a deed in lieu or by way of a short sale. The most important thing, I think, for the counselors that we need to convey to the counselors, it's critical that you understand that these are options that you will guide the client through with the help of a realtor in most cases, because your role will be to apply for the loan modification program. In order for them to even be considered for HAFA, they have to at least apply for a mod, not be approved for a mod, nor be denied for a mod, but at least the application process must be submitted.
Right.
And also, excuse me, from the side of the lender, now there's considerable cost that the lender will save if the homeowner elects to go and take one of the options of a deed in lieu or a short sale. The lender is going to save money in terms of legal fees, in terms of time that it takes to be able to move a property from the homeowner's books, if you will, to the lender's books. So the lender does also benefit greatly. And you look at this in terms of an alternative to going through the actual process. The government is actually coming in and providing some solutions that don't bog up the system.
Right.
Absolutely,
Right.
Absolutely. And I think it also reduces the stress factor, because there's a tremendous stress factor going on with the family not knowing what their options are, not knowing if there's going to be some penalty as it relates to tax implications and all of that. And I think by having this transition option available to consumers, it reduces the amount of stress that they would go through normally.
And that stress is key. I know most individuals that we encounter, they talk about all the things they're going through from an emotional standpoint. And we've talked in previous presentations, this is not so much an emotional decision as it should be a rational decision. I know, John, you've given some insight in terms of kind of comparing the two, in terms of rational decisions and emotional decisions. This, in a nutshell, I hate to say it this way, should be looked upon as a business decision. Don't you agree?
Yeah, and that's one of the things that we've talked about, is that a lot of times it is a business decision. You have to look at, is it going to be a best financial situation for our family, or for the situation that I'm in, to either take the route of trying to do a modification and hold on to the property long term, or is it better to explore one of these transition solutions where I could put myself perhaps in a better situation somewhere down the road because I took this choice up front.
John, I think that's a very important statement that you just made, both you and Shane, because one of the factors that we need to consider is the fact that many of the consumers who are applying for the modification and also getting a mod end up defaulting on that modification later on.
Right.
So do we hold on to the property just for holding's sake, or is it best to consider these transition options and move on and start working on rebuilding our lives to a point that we can now be able to afford all of the things that we're wanting to achieve?
Right. And you also have to look at the cost of holding on too long.
Absolutely.
Sometimes, we as homeowners, we get caught up in the American dream, or what we think is the American dream in terms of home ownership, and we lose sight of what the real goal is in terms of being able to take care of our family. So we want to make sure that, as we convey these messages out there, that there's a penalty, in my opinion, for holding on too long.
So this brings to an end part 1 of our video podcast on the home affordable foreclosure alternative. Stay tuned for part 2.